Yo, what's going on, guys? Bexio back, and today we've got a brand new video talking about the stock market. Recently, it's been very red, very beat down. A lot of people losing money, maybe not losing money in terms of being less profitable. Unless you just recently got into the market, then maybe you're losing money. But this is the time where you got to overcome the fear of losing money and look at the opportunity that this creates for you. So even looking at my own Robinhood account, this is the entire year. You can see the run up, and then obviously that tail end where it dips down is where we are now. It's been a bad few weeks. The market has definitely punished a lot of people, but there's definitely a lot of opportunity opening up right now, and we're hoping we've seen the bottom already. But if you compare this back to the March crash, which sent everything tumbling and everyone freaked out the same kind of ways, and it was just like the end, and who knows what's going to happen, and things are so bad, and that was actually the best time to invest. I mean, you can see, again, we'll use my own portfolio lines here, whatever you want to call them, but my portfolio showing that first dip where the pandemic started, and that entire ride up was because of what happened and different things that happened in the market and rewards that came along with taking that risk of investing in the market when people were very fearful of it. So we can live up to the Warren Buffett quote of be greedy when people are fearful and fearful when people are greedy. So right now, everyone's fearful. You know, we've seen everything from the Wall Street media. They're all worried, talking about the collapse and bubbles popping and how everything's looking so bad. And for the short term, I do think we're going to see a lot of red days, red weeks, red months even for the short term. And I don't think that it's going to let up anytime relatively soon. Maybe by nearing the end of this year, we start to see things get better in terms of the stock market and things actually start to come back. But we're seeing rotations out of tech into recovery, out of recovery slightly into tech, things still selling off. The market's all over the place, and it is definitely scary to start putting money into the market now. But all in all, the market is having a little correction. It's nothing ridiculous right now. Obviously, some stocks are more better than others, but overall, the markets as a whole, not terrible, and definitely in correction territory, not in crash territory or collapse. But we can see, you look at this, obviously, this downward line for my own portfolio, and it's a lot of money to be lost there, and it's tough to see that, but you have to remind yourself why you're investing and what you're investing in, and keep a long-term outlook. That's literally one of the most important things, is to make sure you continue looking 3 years, 5 years, 10 years down the road, and not into next week, next month. Those short time periods are unpredictable, but long-term with good companies, like Apple, Microsoft, Amazon. You can't go wrong with these companies. They've seen this. They've been through recessions. They've been through corrections, and they came out on top and making people more money. So there's definitely some cycles going on. But long term, you're going to look back at this and see, that it was a great time to start investing. Probably. I mean, I'm just comparing this to what happened in March last year, and how if I didn't invest the way I did last year this time, even though everyone was freaking out, and it was way worse. I mean, there were circuit breakers triggered. The market was literally plummeting daily, and putting money in was watching money burn. And I went in to that market saying the valuations are extremely low, and we are in these big blue chip companies is what I stuck to, because like I said before, they've been through these things, and they're companies that are mature enough to know that they're going to make it out. And that's one of the bigger important things. even though this is not as bad as what it was last year. But going into a market like this is definitely tough, but sticking to blue chips, sticking to large cap companies to get your foot in the door. If you're just getting started, that's what I would do. That's what I would recommend for people who are getting started investing, is start with the big companies, the established ones. There's not as much profit to be made there. They're not going to double your money in a year. They could, you know, I mean, anything's possible, but like these big companies that are going to make sure that they're going to be around in 5 years, 10 years, 20 years, 30 years, and into the future. And other companies that are more speculative, that are smaller, I would only get into those after you get your footing into the blue chip stocks and stuff like VTI, the ETFs, to really secure a footing and a safe base to start building off on. But the opportunity in this market is here. I mean, it is looking like a great opportunity for a lot of stocks. Things are on sale. Things are very cheap right now. I mean, Apple under 120, I was super excited about when it was there. And if we get back there, I might even be buying some Apple shares under that price. That's my price for Apple to get in. I'm just honestly focused on things like Apple, maybe Microsoft. I really like Disney. That's a little more of a risky play than like something like an Apple, but I have made a video on Disney, and I talk about Disney a lot because I think they're primed to do good. But the opportunity's here. It's up to you to decide if you want to take advantage of it. It's not something that's easy to do. It's not going to be something where it turns around in a day, in a week, in a month. It's probably going to take the whole year this time around. I don't think there's too much more stimulus that can come in, money to be printed. Obviously, that's probably going to happen, but we have more factors like bond yields and interest rates going up to affect the market, to push it down more than we did before in those types of things where the interest rates were cut to zero. And it's more like the threat of interest rates going up, but bond yields have been going up, and that's really pushing the market down. But we'll see what happens, and you know the saying, don't fight the Fed. If they are going to continue purchasing bonds, continuing to keep the bond, or try to keep the bond yield low, then don't fight the Fed. They got more money than everyone. They have unlimited money. They've literally said that. So guys, let me know what you think of this market. Are you getting involved? Have you been involved? And are you worried at this point? And are you, continuing to buy in? That's the last thing I will say. Be consistent with your investments and investing. That's another huge thing to make sure you do. Stay consistent. Pick an amount of money, even if it's $50 a week, $100 a week, $1,000 a week. Pick an amount of money that you can be safe with and know that you can put it in there and let it sit for the next decade and not have to worry about it. And you'll be all right. You'll be good to start investing if you want to start now, or if you already have a portfolio, continue adding to it. Dollar cost averaging is a great way to actually develop your portfolio and make it turn into a lot more money. So guys, as always, if you do, smash the like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.